In this video, I'm going to go over how you can start investing and how it isn't as scary as you might make it out to be. Hello there friends, my name is Edward White. I'm a creative entrepreneur based in the UK. I make videos around branding, building my businesses and productivity in general. When it comes to investing can be scary, and it can be this thing that you just think, I want to buy stocks in Apple or General Motors. But really, it doesn't work like that. Or how I think about it, it doesn't work like that. And I'm going to explain this all in the video, the tools that I use and how you can get the most out of the markets without really doing a lot of work. And let me explain. Firstly, I want to say thank you so much for watching this video. It is excellent that you want to start investing, and I think it's one thing that needs to be taught in school and should be taught at a really early age. But it's fantastic that you are watching this video, and I want to show you how you can do it easily and with really sort of little amounts of money. If you haven't watched my video on compound interest, check this video up here where I speak about the compound effect of saving, the compound effect of doing videos, the compound effect of everyday life, and how if you keep consistently doing it, you'll have a higher rate of return than if someone who starts later but with more experience or money or anything like that. I know that you may feel that investing is scary and this thing that you completely don't understand and you don't know. And trust me, I felt the same when I first started. But let me kind of like break it down into how you should think about investing. Let's start there. You want to set it as a continuous way that you're going to save money and put money aside for savings, pension or house fund. Think about it as a long-term thing. Investing shouldn't be for the short term. I haven't read any books yet that have said do it for the short term. If you look at anything that Warren Buffett has done, he says do it for the long term, invest in companies that really matter to you. Any book on investing has said this that I've read, and I will link them below if you want to read them. Good little books to start with. But yeah, think about it as a long-term thing. Think about it as something that you are going to put away for your future and you're not really going to think about it. How I do my investing is in an investment fund. Now, you might be asking, what is an investment fund? And according to the website investopedia.com, they say that an investment fund is a supply of capital belonging to numerous investors used to collectively purchase securities while each investor retains ownership and control of his own shares. How I do this is I use mutual funds. And in simple terms, this basically means that the money you put in becomes part of a big group. And this big group is invested by certain people within the company. Depends on the investment portfolio that you go for, and then that money is then pushed out. So the more money they put in, the more money they can get back. They will then take a fee off of whatever amount you put in, and it's normally about 0.1 or 0.2%. So it's not that high, and you don't want to go for a high percentage. So where do you get an investment fund? The two accounts that I use are Vanguard and Hargreaves and Lansdown. Hargreaves and Lansdown, I think it's a UK-based company, so if you're watching this in America, I'm not sure if you'll be able to get it, but you will definitely be able to get Vanguard, as that is a global company and you can have accounts in all over the world. Yeah, check out these two. Really good, really simple to use, and I'm going to go through and show my screen now so that I can show you what I've done and the different accounts I've got, and hopefully this will make it clear to you. If we look at my screen, I'm on Hargreaves and Lansdown. The three accounts that I've got that you can see here are a lifetime ISA, a self-investment pension plan, and a fund and share accounts. The first two, the lifetime ISA and the self-investment pension plan, I can't actually use the money. I can't take the money out until I'm either at retirement age for the self-investment pension plan, or I want to buy a house. I can use for the lifetime ISA, but the money you get from the government is quite a high amount. So the longer you can do it and the higher amount you can put in, the more money that you can get back. So definitely look at this. I highly recommend it for anyone who has money or anyone who wants to start saving. You don't have any minimum amount, which is perfect for most people. Start with £20 and then work your way up. Trust me when I say, and I sound like an old person dad, but trust me when I say you want to start investing, and this is something that you want to start doing. I'm going to show you my fund and share account, which is basically, I've only got one mutual fund, and the mutual fund that I've got is Baillie Gifford American. So this looks at all the different American companies and then overall will invest in all of those different companies. You can get various different accounts. So there's if you look at Vanguard, do some good accounts. Please check this all out for yourself, because I'm not a financial advisor and I do not advise anyone on what to do. So for different funds, I'm telling you how to do it. You need to go and work out what is the best way for you, okay? Disclaimer. The Vanguard, they have different areas and it will seem confusing, and please do your research on this. Like Vanguard, so the FTSE 100 is the top 100 companies in the UK. And then it will invest a certain amount into each one. So you've got a kind of piece in the pie of each different company within the UK. I'm sure some of you are asking me which funds you should get, and this will come down to your personal preference. And what I've learned is that you can have funds that are all into stock, which has an associated higher risk to it than, say, you can get funds with 60% stock, 40% bonds. So it's got that threshold, and bonds are seen to be safer than stock and investments. I'm not sure why, I don't really know why, but go and check it out for yourself. Basically, the younger you are, the more adventurous you want to try and be, because the more time you've got to gain back the money that you lose. The likelihood that you will lose a lot of money is fairly low if you just keep investing consistent amounts. How this sort of works is, if you picture it like over your lifetime, you're going to go through different markets, and some of these are going to be really good markets and some of these are going to be really bad. So if you had investments at the start of the year in 2020, you would be on an okay path, and then suddenly your money's going to look like it's all drained out and it's all gone because March happened and coronavirus happened, and then the markets just really went a bit volatile. And then, but if you would have still invested, say, £100 each month into these, well, the 3 months whilst the markets were volatile, you would have bought shares at a lot lower price than you would have in January. So when these then reach back up, it gets higher and you haven't lost as much money, and the market's never not gone up. And I know that sounds really stupid and simplistic, but yeah, it's true. The market on average, the average stock market return is about 10% per year for the nearly last century. The S&P 500 is often considered the benchmark measure for annual stock market returns. Though 10% is the average stock market returns, return in a year are far from average. So again, that statement of returns in a year are far from average is the crux of it, I reckon, is the markets are volatile, and that's just part of the game, but it's the longer that you can invest for and the longer that you can put money in for, the higher the return that you're going to get. I hope that makes sense, and I hope it's simple enough. Please let me know in the comments if it's not. The next step that I want you to think about in terms of investing is the mindset. This, for me, needs to be something that you need to do, and you need to put in the practice in place to start investing. And it's not going to be something that you will do immediately, and it's not going to be something that you will think you need to do, but I really wish someone was pushing me and telling me to do it from a younger age. It took me just watching videos and reading books about it to go, oh yeah, I know how to do this. And it will seem scary, but please, if you have any questions, please let me know in the comments and I will be more than happy to help. The mindset I want you to have is that this is a long-term game. This is a game that you're not going to pull the money out. You're not going to worry about the markets. You're not going to try and time the market. You're not going to try and buy stock when it's really cheap. You're just going to put in a consistent amount of money, whatever that may be for you. I started off on, I think the accounts were about £30 a month, which for me, that was a lot of money. And then, yeah, just gradually working it up and pushing more. And I think once you get into that habit, and once you get into that good habit, you'll start to want to invest more, and you'll start to not need the money for other areas so that you can invest more. A good mindset to have is long-term and sort of longevity. I think that's the word. I'm not sure. But yeah, have a long-term mindset, have a goal in place to sort of achieve and strive towards, and just keep working towards it, because it will pay off in the end. So what advice would I give to myself 5 years ago? And this is a good question to keep asking yourself, I reckon, is I would say start investing. So I would have been 21 5 years ago. And I would just say start investing, start putting money aside, start building that habit, because you would have a lot more money now. And I know, right, if you're working, I think it's a different mindset, but like, think that you've just bought a new thing on finance and just do it. Just put the money aside and just say, yeah, right, 50 quid is going towards that, whatever. And just start investing that amount of money and keep putting that amount of money in and do it, and then see the money build up over time, and you will start to get, it will start to feel good, and you'll start to push it more. And I think that's where the good habit comes in. So yeah, my advice to my younger self would be just start and keep doing it. Don't worry about it. It will feel scary, but yeah, ultimately you can't really lose out on it. I want to say, I hope you found this video useful. If you have any comments, please let me know below. Disclaimer, I am not an investment person. I don't advocate for investing. Fuck, I do advocate for investing. Right. Disclaimer, I am not a financial advisor, so anything that I say is my own experience. I'm just relaying what I have done. I'm not saying it's the best practice. I'm not saying that you should do it. Please, if you have any financial ideas or anything that you want to ask questions of, please speak to a financial advisor who will be better suited to your situation. It's like a doctor. You wouldn't go and ask me how that lump is on your right toe, because I don't know, but you go and ask a doctor about it, okay? Think about it like that. Disclaimer, yeah. Thank you so much for watching this video. I want to say, yeah, I appreciate you, and I hope that you start your investing journey, and I hope this is that kind of little catalyst for you to start your investing journey. Thank you so much for watching this video. Goodbye.